All right, joining me now, our investment gurus, Craig Columbus, President and Chief Market Strategist at Advanced Equities Asset Management, Don Luskin, Chief Investment Officer at Trend Macro, and Michael Pansner, Wall Street trader and author of Financial Armageddon, Protecting Your Future from 4 Impending Catastrophes. Art Laffer is contented to do double duty, and we welcome him back as always. Usually it's been trashed, this bull market, maybe because George Bush is president, maybe not. But just everyone's looking for a bear. We've already had the bubble bursting in housing. What about these other issues, oil and gas? I mentioned housing. There's always something, Don, that's supposed to muck it up and destroy it, but it never seems to go down.
Well, you're talking to the wrong guest on that subject. I don't believe in financial Armageddon or any of that kind of televangelism. I think all that stuff just provides a nice big wall of worry with all kinds of wonderful handholds that we bulls can just keep climbing and climbing, and the proof is in the pudding. Just look at the newspaper, look at CNBC. Stocks are at all-time highs. The case for the bull market is right in front of your eyes. You are living it.
Did you say the greatest story never told?
You know, Larry, I got to say, on the greatest story never told, the one threat to this bull market is that you keep saying that. You're giving away the secret, and as soon as everybody gets it, it's all over.
As soon as I see the mainstream media pick it up, I'm out. I'm turning and running tail. Arthur Laffer, why hasn't Armageddon happened? Why not?
Well, this economy is fantastic because of the economic policies. The only dark thing I see in the horizon, Larry, is what happens in the election of 2008 and what might happen with policies if we get these people who are protectionists, anti-growth tax hikers in. But that's a long, long way off.
By the way,
I don't think we have to worry about that now.
On that point, very interesting sidelight, a new John Zogby poll, I just saw this last evening, came across the email. In the New Hampshire primary, Bill Richardson, who was the tax-cutting pro-growth Democrat, has gone from an asterisk to 10 percentage points.
Yeah, he's my hero.
He is actually, this is so interesting. Don Luskin picked this up, too. Richardson is on a bit of a roll. What could that mean? That's a whole different set of economic policies from what Art referred to with Senator Clinton and Senator Obama.
That's great news. It's great to have somebody on the Democratic side putting a little bit of conceptual pressure toward growth. You know, he's not going to be the nominee, but he's going to influence the policies of the nominee if he gets any traction at all. It's great to see that he's doing it. But here's the risk with how reasonable the Democrats have been lately. The fact that we don't have a meltdown in trade so far, for example. The problem is they're on best behavior. They don't want you to think that they and their union buddies are going to slam the brakes on growth if you elect a Democratic president in 2008. It's a bait and switch. Don't become complacent. Art Laffer is absolutely right. The big risk is 2008. They're on best behavior. Don't believe it. These people are a menace.
Hey, Don Luskin, why did gold drop so much this week? And by the way, Art Laffer said it earlier, the inflation forecasting tip spread has been narrowing as gold has been falling, and the dollar, at least against the yen, has been very strong.
Well, the tip spread actually has no record of being a good inflation forecaster. It just mirrors whatever contemporaneous inflation is. We've only had a tips market for 7 or 8 years. Its record has yet to be established, and what we see so far isn't particularly inspiring. The reason gold's down is, A, central bank selling, which is really tragic because they're selling at a low, an asset that belongs to the American taxpayer. But it's also because we've had 2 back-to-back slightly tame CPI reports. And so inflation hedgers are just, they're just saying, okay, well, maybe at the margin I don't need this as much. I'm buying this with both hands. I still say gold 1,000. Mark my words, it's going to happen.
All right, so and would that by association mean you're still buying commodities and materials?
Oh, yeah, it's not just gold. It's
so
commodities, materials, energy, the whole 9 yards.
All right, so we've got 2 commodities buyers. Arthur, did you notice how Don kind of slipped it in? Oh, yes, by the way, the inflation reports have come down quite a bit in the last couple months. That was kind of a de facto. After he got through trashing the bond market, which I believe is the most widely traded market in the history of civilization. Art?
Larry and Art, if you love the bond market so much, then certainly you must be observing that Fed rate cut expectations are essentially now gone from the bond market. How about that?
Yeah, well, that's true.